The world is heading into one of its worst power and energy crises ever. We are seeing power outages from China to LA. There is mass shortages of natural gas, petrol and fuel. This is causing oil and commodity prices to hyperinflate as countries are desperate to secure supplies and are entering into huge bidding wars. In this video, I'm going to go over how this could trigger a hyperinflationary time, and this could cause rates to skyrocket, which will cause a global market meltdown. And if things couldn't get any worse, this is happening at a time when we're entering into a cold, dark winter. Okay, everybody, let's not waste any time. Let's get straight into it. Look at this, everybody. Fuel prices soar across Asia as a global energy crunch deepens. But what has caused this crisis in the first place, and how bad can it get, and why should we all be paying attention and care right now? So this all started as energy prices around the world are climbing amid a perfect storm of weather, rising power demand and supply constraints. It's roiling markets overseas, with China and India facing electricity crises, while a dozen power companies in the UK have gone belly up. And I'll get into in a moment how this is going to affect the stock market massively. You can't ignore what is happening right now. So what's contributing to this crisis is oil prices jumped again Monday after OPEC decided not to boost production beyond the modest increase that it had already previously outlined. And so what this has caused, prices for both oil and natural gas have roughly doubled over last year. And gasoline at US pumps is up roughly about 50% on average. But people, it is getting much worse. Look at this. I've been covering this, but people, this is just getting worse and worse. The price for coal is absolutely skyrocketing. It is up just 12% again today. It is up 28% for the week, and it's up a huge 234% year to date. So remember how all those central bankers told us, don't worry, it's just temporary, it's just transitory, and all those financial analysts that were saying we're going to head into deflation? Well, they were all wrong. Very wrong. It is about to get much worse. And it's not just coal, everybody. Natural gas is also skyrocketing. It is up 17% for the week. It's up 40% for the month, and it's up massively 153% year to date. These are borderline hyperinflation figures, everyone. We can't ignore this issue, and this is going to have major consequences for the global economy and for the global markets, which I'll get into in a moment. But it's not just these commodities, everyone. Crude oil. Crude oil is up another 5.9% this week, 15% this month, and 63% year to date. But you may just think this is just boring commodity prices. But people, this is why it matters. Commodities like oil and gas operate in global markets, so the US isn't immune to the effects of rising prices. And what this means is higher energy costs impact the economic recovery. Remember, every dollar that goes to electricity and heating bills is a dollar that isn't spent on holiday shopping or going out to eat, or money that businesses could use to invest and expand, or money that could go into the markets. And for all you people wanting to know, okay, I get it, this is an issue, but how is this going to affect my stock portfolio? Well, this is how. An increase in oil prices usually lowers the expected rate of economic growth and increases inflation expectations over the shorter horizon. Translation, central banks are going to have to start hiking interest rates very soon to squash this high inflation that is coming. This decreases economic growth projects, in turn lowers companies' earnings expectations, resulting in dampening effect on stock prices. Moreover, the increase in input prices for companies associated with an increase in oil prices in general tends to compress profit margins. In addition to this, during periods of high oil prices, investors usually become more uncertain about the outlook for corporate earnings, which in turn may lead to higher equity risk premia, putting additional downward pressure on stock prices. So people, this is why you have to put on your macro hat and not just pay attention to, the next hot stock pick. You have to know how the global economy works, how the global markets work, and how one asset class affects another asset class. And Bank of America has predicted that the Brent crude price could hit $100 per barrel. So everyone, what does this mean in simple terms? This means the inflation party, it's only getting started, everybody. I tried to warn you. I told you a good way to hedge against inflation about 5-6 months ago was to invest in diversified commodity indexes. They have completely outperformed the S&P 500 massively. And also what we're seeing now is markets finally waking up to this reality. Today, the Asia markets were down. Right now, the European markets are getting smashed. And also, it looks like the US market is going to have another red day. And we're finally starting to see that the stock market boom is over, the euphoria is over, and investors are now starting to wake up to the reality that stocks don't just go up. And if stocks drop 0.5%, it isn't a good buy the dip opportunity. We need to wait for the real dip. But what is the biggest risk of all right now? What this is going to lead to is central banks, they need to get the act together. They can't ignore it. They can't hide it. They can't keep lying. Inflation is here. It's real. It's getting worse. And they're going to have to start hiking interest rates. Now remember, for every 1% increase in interest rates by the Federal Reserve or whatever central bank you have in your country, stock prices can fall anywhere between 5 to 10%. Especially if they're doing this because of inflation, not from a booming economy. Remember, central banks, if there's a booming economy and they're lifting interest rates, that's okay. But if we enter into a stagflationary period of high unemployment, high inflation, well, that's a much worse scenario. And that's looking like a much more likely scenario that we're in right now. What you have to know is the reason why asset prices seem like they've only gone up over the past 30 years is because interest rates have just been getting dropped lower and lower. But now with the world with interest rates at zero, central banks have no or little room to move rates. If they do move them negative, they can only move them negative by about 0.5 or 1%. And also there's something called law of diminishing returns. That means even though the Fed's printing 100 billion right now, well, they're going to have to print trillions of dollars to get the same effect of this current stimulus that they're having right now. But they can't do that because inflation is out of control, and that will just add more fuel to the fire. So really, the Federal Reserve, central banks around the world, they've been kicking the can down the road, but it's looking like the road we thought would never end is now actually starting to come to an end. They got no more ammo, they got no more tools, and this is checkmate. So if interest rates go up just 2 or 3%, we're going to see one of the greatest deleveragings in history because people have been piling on debt like it's no tomorrow because the central banks lied to them saying, don't worry, rates will be low for a very long time. So everyone, time is running out. I've been warning about this for months and months, but remember, it's better to be prepared a year too early than a day too late. So you may want to start building some cash on the side, and you also may want to make sure that you have all the supplies that you need, like fuel, food, because we're going to see more and more shortages, and you want to become more self-reliant because these global supply chains are completely broken. And for all those who are prepared, I think there's going to be some great buying opportunities. People that have been buying these 1-2% dips, that's nothing. I'm waiting for the real dip of at least 20%. But everyone, that's just my thoughts and opinions on the situation that's going on right now. Who knows, things could change. So what do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.